My name's Brad Laddusaw, president of the California Mortgage Association. We're here in Newport Beach, California for our fall conference. I got Jeff LaMotte here with Val-Chris. I've known Jeff for, it's probably pushing at least a decade.
Yeah, I would say about a decade.
And I feel over the last few years, though, we've actually
communicated better. We
communicated, like we picked up the phone and called each other.
We actually talked.
Found out we're like the same age.
Brought me out of my cubby and actually got me involved.
I thought you pulled me out of my cubby.
I don't know. I get nervous in crowds.
Get out of here. Jeff, would you mind introducing yourself, your company, the types of deals you guys are taking down? How long have you been in business?
I should start with, my name is Jeff LaMotte with Val-Chris Investments. We've been in business since 1975. We focus on first, second trust deeds, business purpose. We don't really do any fix and flips. We don't really do any construction loans. We do 1 to 3 year business purpose loans, whether it's buying rental properties, whether it's cash out for your business, owner and occupied, primarily residential, and mostly in the state of California, but we also do a couple out of state as well.
What others? I didn't know you guys are out of state.
Yeah.
What other markets you guys touching?
So we're also in Florida, Texas, Colorado, Washington, Arizona, Hawaii, and soon to be Nevada. We're getting licensed in Nevada right now.
Okay, so when you say a couple other states,
like 8.
Oh, wow. Who's counting?
Or however many that was, yeah, but yeah.
How long ago did you guys expand out of California?
End of 2020 is when we decided to finally make the jump and start doing it. We started with Florida and Texas, and we kind of went from there.
What was the main deciding factor to just...
I would say rate compression in California. You got to realize it's 2020,
yeah.
2021, right? So rates were historic lows, and you were feeling it on the private money side, hard money side, whatever you want to call it. And so for us, we were saying, okay, well, there's a lot of competition. Rates are historically low. What are we going to do? Out of state was getting higher rates at the time. They still kind of are, depending on the state that you're in. But for us, it was a way to offer more trustees to our investors who were very hungry at the time for them as well, and possibly get a rate bump on the deal too.
Yeah, so you guys have been doing deals since the 70s. There's very few companies that can say they do that. I think that's one of the beauties of this industry, the asset-based lending, private money, whatever you want to call it.
Thursday. It changes.
We joke around about that. Depending on who your marketing department is, who your marketing team is, that's the type of lender you are.
Right.
But what would you say? I'm not gonna. We weren't around. We were not around in the 70s.
I'm not that old, no.
Yeah, but over the last few years, what has been like the biggest challenge for you guys? Let's bring it to California on doing deals. Has it been quality of deal? Has it been capital? What's been the biggest challenge for you guys?
I would say it swings. There's phases where we go through where we need more capital, and there's other times where you need more deals. I would say just after COVID, we were plentiful of deals because a lot of the market shut down, and so non-QM wasn't active anymore. So then we were struggling to find capital to fund those loans because people were nervous to put money out after the pandemic. Shortly thereafter, it was complete swing. We had more investors than ever, and we had less deals than ever. So it changes. I would say in California right now, we're still dealing with some of the tail end if there's any problem deals when it comes to tenants squatting in properties, whether it's some of the leftover COVID guidelines that are thankfully mostly gone at this point. But other than that, I would say right now it's pretty steady. There hasn't been any major swings that we've been dealing with. And it's been good overall. I can't complain.
No, I like your guys' model because it is the traditional asset-based model. Do you mind explaining your guys' capital stack, how it's structured? You're dealing with private bennies, investors, trustee model. You guys fund route, considering fund. How are you guys doing your deals?
So we're still private investors buying notes. We sell them either as a whole or we fractionalize those notes to private investors themselves. We have not looked at a fund. We don't plan on going to a fund. If it's not broke, don't try and fix it, right? We're still funding a good amount of deals. We're still between 80 and 100 loans a month for us, which is substantial, I think. And it's taken a lot to kind of manage that deal flow.
And it's also, I think, the infrastructure you guys have built behind the scenes kind of, one, provides that surety of closing to your borrowers, but then also for your investors, a surety of, we're going to keep this going. Once they get paid off, we potentially get it replenished into another deal.
Yeah.
I guess on the investor side, what's the biggest demand you get from your investors?
First trustees in Orange County, low LTVs with high rates.
Yeah, I want a 30% loan to purchase price loan at 16%.
And I tell them, I want those too. Yeah, no, I would say from investors, it's consistent returns, right? They don't want to deal with problem borrowers. So we structure our deals to how do we get the most consistent returns? We want payments, we don't want properties. So we do what we can to work deals out to make sure that if there's a problem with payments, that we can make sure that we get those payments in some way. Whether, depending on the moon case, whether you do forbearance modification to handle those things, or you work some other way out. So investors want consistent returns. They don't want to lose sleep at night. They want those secure deals. And that's what we try and provide. So that's how we underwrite our loans, to do that.
And it's, of course, no underwrite's perfect. We call it life. Shit happens, right?
Yeah,
so it's just, what does your experience allow you to do to kind of navigate some of these things? And I think you guys bring a lot to the table. Lending since heck, have you been lending since the 90s? You're doing pretty good. I mean, you've gone through multiple cycles. I want to pivot a little bit. How long have you been around and involved with CMA?
So I've been to the CMA.
I'm not going to grill you on this, okay? I'm not going to grill you.
I joined the industry in 2009,
okay.
And on a part-time basis. I was still technically in college, and I've been going to CMA kind of ever since. Honestly, it's not a company membership as much as I thought it has been. So, but ever since I've been active in the CMA I've been heavily active since probably 2010, 2011. I'm not a social person for the most part. So I come, I learn, and I leave. But over the last couple of years, I've been getting better as far as communicating, going out, golfing.
It's just a two-way street, though.
I'm getting out of my shell a little bit. And the CMA is a place that you mentioned earlier. You come to learn, you come to share.
Yeah.
And I haven't found another conference that I get that from. And I even said to you also, like, I want to give back to this organization because I have learned so much from it. I have made a lot of fantastic contacts from it, people that I consider friends, golf buddies, etc. So it's a good place, and I've been there for 14 years now, I'd say, unofficially, and I've been enjoying it.
I think that's another amazing thing you touched on about being a member, being involved with CMA. Yes, we are all competitors.
Yeah.
But we all look at deals under a slightly different lens.
Yeah.
You could do certain deals that we can't do and vice versa.
Sure.
And I think it's having that conversation, going and swinging the sticks, having a couple beers. I mean, at the end of the day, we're in the people business.
Yeah.
And it's people work with who they trust and who they want to work with. So it's, I think that's a big takeaway CMA has provided for me. Yes, education, compliance, best practices, advocacy, but being able to do this, have a conversation, I think it's worth its weight in gold. And you don't really get this at any of the other conferences.
No, you don't. This is the more natural conference, in my opinion. I come here and I feel like I'm seeing kind of old acquaintances every 6 months. Other conferences, it's tougher because it feels much more networking, and it requires
So how much volume you doing?
Yeah, it requires me to get out of my shell. But here, I'm not like asking you, hey, how many loans are you closing right now?
Not enough. Not enough.
Yeah, okay. I walk up and say, how's your golf swing?
Yeah.
How are your kids? Like, stuff like that. And that's the part that you enjoy. That's the part why you come back. But then also, it just adds a level of camaraderie to it. It's nice.
It's great. So we're going to do a complete 180 pivot.
Okay.
Who is Jeff LaMotte? What do you do for fun? What makes you tick? I know you live at the office and do a lot of that, obviously, but take away the loan business.
Okay.
What makes you tick, man?
I grew up here in Southern California. I don't plan on ever leaving. I will probably have a second house in Hawaii one day, which is just another beach, right? So
I knew we were friends for a reason.
Beach to beach, right? But I grew up here in Southern California. I don't ever plan on leaving, and it's because I love the warm weather. I love the water. I grew up playing water polo. I grew up surfing. I grew up kind of like every other Southern California kid. I went to UC Irvine, and what makes me tick, I would say right now, are my kids. It's an amazing thing having little U's run around, right? I mean, it's
insane. We talk about this all the time.
It's the best thing in the world, and so it's now getting my kids into fun hobbies, and it's seeing the things through their eyes, and whether it's going to Disneyland and seeing them have some fun, which I'm always there with them, but or if I'm on the golf course. And for me, if I can find anything competitive, if I can find anything with the family. I'm coaching my kids' soccer team now, so
they let you coach.
They let me coach. Shocking! I did passive background check and everything.
We're doing sprints.
I know. Yeah, exactly. But what makes me tick, honestly, is really the family aspect of my life right now. I mean, why are we all doing this? We're doing this for the family, for the kids, for the enjoyment of life, and I think that's the most important thing.
And how old are your kids?
3 and 6.
3 and 6.
They're on my socks even. I got my Father's Day gifts every year. So there's Wyatt.
So we're gonna have to do a pan-in on these.
There's
socks.
Wyatt. There's Charlotte.
Yeah.
So baby photo of my daughter Charlotte and my son Wyatt. So she's the 3-year-old, he's the 6-year-old.
I love it, man.
So I bring him with me when I go places. You got the American flag on. I got
I got to upgrade. I got to get that on the Christmas list. But Jeff, I mean, I value our friendship and everything that we've been able to build over the last few years. And thanks for jumping in the hot seat with me.
Happy to be here. Come on now.
You coming.
Always,
I think we both earned the bourbon and Coke in a little bit here. So
a couple, yeah.
Thanks again.
Of course. Thanks, guys.